With us now for more is Rastine Mercado, Research Director of China Bank Securities Corporation. So good to see you again, Ras. Thank you so much for joining us.
Thank you for having me.
You know, I asked you just before the midterm elections what the catalyst might be, and I know you mentioned this acronym, and it stuck. It really stuck. It was CMEPA. And right now we're just about a month away, or a week away in fact, for what you see as a game changer.
Yep.
In what way?
So, of course, one of the reasons why we like CMEPA is that our notion is that it should improve the activity in the market, right? So I think just to illustrate the point, I'm gonna churn out some numbers here. So if you were an investor, for example, and you have 1 million pesos invested in stock XYZ, for example, a round trip buy sell is gonna cost you around 1.2%. So that's 12,000 pesos, right? So with the reduction in the STT from 1.2, that drops down to 0.7. So from 12,000, that becomes 7,000. So if you zoom out and then you look at what the volume is in the market, so I think our average daily turnover year to date is north of 5.5 billion. So let's just talk about the hard round number of 5 billion pesos, right? So that would translate to every day a savings of around 25 million pesos. Right, and then
Savings on whose part?
On
the investor?
the sellers, yes,
the seller.
yes, because if it's daily turnover, it's one seller selling to a buyer, right? So
the seller gets more proceeds.
yes, so so 25 million in savings for the seller, assuming that that seller reinvests that into the market. Let's just say, for the sake of being prudent and being practical about it, it's a 25% reinvestment rate of the savings, not the whole 25 million is reinvested, right? So that 6 million, which is 25% of the 25, gets reinvested every day, and that kind of snowballs, right? So when we ran the numbers, that gave us the impression, or at least our estimate points to average daily turnover improving by close to 30% or over 30% between the end of this year and the end of next. So that is kind of a practical appreciation of what this law or the passage of CMEPA could do to market. So that's what we're excited about. Hopefully, we see that happen. Their investment rate hopefully is more than 25%, and hopefully that's going to be enough to attract foreign funds in troves as well.
So theoretically, it really impacts a full ecosystem, from the seller, the investor, to the regulator, and to the whole capital market development, because we're all coming down to friction costs. I mean, I often hear about the friction costs and how high it is compared to the ASEAN average.
Yep.
How does this make us competitive then?
Well, certainly we've come off a pretty high number, right? So relative to where we are in the region. Are we the lowest in the region? I think we're still not the lowest, but it's certainly progress towards that. And I think when you're talking to potential investors, that might be one of the things that get flagged, right? Or that's a concern. So having this come in is certainly something, it's a positive development. And that's one less reason for foreign funds to kind of think and reconsider their investments in Philippine equity markets.
Especially when they see that CMEPA really means Capital Markets Efficiency Promotions Act. So really that word, the operative word there is efficiency.
Yeah.
To my understanding, it also impacts and also enables the creation of new products in the market. So what sort of an impact would that have on the programs that the government has in deepening our own capital markets?
Well, I think overall, if you have deep capital markets, right, if you have a fairly robust stock market, this encourages enterprising individuals or group of individuals to tap capital markets for potential listings, right? So that, in a way, could broaden economic activity. Of course, those businesses, once they scale out and they get access to capital, this will entail more jobs for Filipinos. So overall, it should kind of help move that ball in that direction. It's essentially a step towards making sure that this is not just something that's relegated to the stock market, but it could eventually be something or foster a more inclusive business environment for uplifting the lives of everyday Filipinos.
That it has a multiplier effect that impacts the economy as a whole, but it's coming at a time that we're seeing a lot of volatility out there, global oil, the Fed. How then does this play into how risk appetites are measured? We have something positive going on in our own capital markets, but then a lot of negatives out there.
Okay, so I think first off, you mentioned that we did see a complete retracement from June 12, and that was really buying because of what was happening geopolitically in the Middle East, right? So that's a sigh of relief. What was worrying us really was that it could be there for quite a period of time, but now that it's come off, it's not too much of a concern now. And I get what you mean that there are prevailing uncertainties and that's dampening investor sentiment, but I think it's also important to kind of take a look at where we came from in the first quarter. Earlier this year, we were concerned that changes to U.S. tariff policies would really lead to a knock-on effect in terms of risk appetite, growth expectations. While some of that did materialize, right, I think earnings expectations have kind of come off their highs earlier this year. The U.S. it had, but I think that's slowly starting to pick back up. So I think we are moving past the peak uncertainty with that, at least for now, because I think nobody could come close to the peak of April 2 when everybody was like, okay, we expected 10% baseline, and then we saw the huge numbers that were levied on some countries, right?
But I thought we were just approaching that. The end of the tariff pause is in July 9th.
Yeah.
So I was thinking that that might be the peak, but you're not seeing that.
Yeah, well, it's encouraging to see that the U.S. is striking deals with its trade partners, right? So that kind of gives you the idea that they're looking to negotiate that. And hopefully what we see at the base case is that the 10% global tariff might be the one that will be status quo, but then if that's levied across all countries, then that's kind of just moving the baseline a little bit. So there's one risk. The other is the dollar peso, right? So the dollar strength earlier this year was kind of a concern for some foreign funds investing in the Philippines because they have to factor in potential depreciation into their total return, right? So now that the strong dollar narrative is diminished, even if we did see that safe haven buying recently, the DXY is still down, right? So that's one less risk to think about. So overall, you have these receding risks compared to where we were the first quarter on a week-by-week basis. I know it's hard and it's difficult.
It is.
Just because
It's tiring.
Yeah. So we've been glued to our monitors and what's happening outside of the Philippines, right? So,
But there must be a lot more clarity now in the second half, now that we've seen how the Bangko Centrales acted. So how much of a continuing maybe support will that be for the second half, and which counters would you invest in if indeed equities would be the space to put the money?
yeah, so we're seeing the BSP easing rates. That's partly because inflation has been pretty low, and I think the outlook is that it will eventually come into within target, right? So, on the consumer front, so on the things in the equity market, sectors we like, consumer still looks like it's a pretty good second quarter, and hopefully that continues for the rest of the year. So, I guess when you kind of we took a look at it, it's not really the times when inflation is coming down that you see that resurgence. It's really more on when inflation comes off a high and it stabilizes, and we're expecting to continue seeing that. Utilities still in vogue at this point. I think that's kind of the defensive part of things. What's interesting to us is that telcos are they've come off the highs, and those are high dividend paying stocks, right? So them coming off to us means that maybe investors aren't really looking too much at dividend yields at this point. So that might mean there's improving risk appetite for other sectors or probably more cyclicals. So it's spotty across the sector, but so much so because different companies are affected by different policies. But overall, I think those are the nice sectors to be in or have exposure in through the rest of the year.
All right, we'll keep an eye on those sectors for the full second half. Thank you so much for
you.
joining us.
Thank you for
Rastine
having me.
Mercado of China Bank Securities Corp.